June 17th, 2024. Today was a really climactic bull trend from the open. And you can see we got pretty much a trend the entire day. So pretty strong day for the bulls. Something that I thought was interesting was how we broke through the all-time high. If you look, the all-time high was right here, and you can see we broke through it. And usually when you break through something really significant like the all-time high, you don't race right through it, you end up oscillating around it. However, bar 35 broke directly through it, and bar 36, the tail never overlapped this. Therefore, what do I think? I think we're probably going to have to test back down to this area. I don't really think that it's very unusual for us to blow through a really important support or resistance point and not test back into it. So I think that we'll probably end up pulling back to this price at some point. Something you have to keep in mind is that whenever you get a bull trend from the open that trends all day, the next day has a 75% chance of 2 hours of sideways to down trading starting by the end of the second hour. Additionally, on the next day, there's a 50% chance that you get some sort of follow through buying on the open. So we might get some sort of quick rally on the open tomorrow. But again, 75% chance that we're going to go sideways to down for a couple of hours. So only a 25% chance of a real bull trend day tomorrow. If you look at the weekly chart, something I thought was interesting. I'm just going to use the SPY, this continuous chart. Something I've been looking at with the weekly chart. I keep saying, I think this is enough that we're probably going to pull back into this area. But the bulls are doing a really good job at starting to convince me otherwise. Like I said, do I still think this is probably going to end up being the start of the trading range? I do, but there's other things to consider. There is a big leg one, leg two measured move. So it lands you somewhere up here. So if you go leg one and then this pull back sideways and then leg two up here. So this is where that would be. And additionally, you have a breakout, and a measured move up of the trading range. So the trading range from here, and then you get the breakout above here. And you can see this is the trading range, the breakout above. You can see both of these things bring you to around 600 on the SPY, which is 6,000 on the Emini. And 6,000 is a really big round number. It's one of the thousands. So it's going to be extremely important if we get to that. Again, I think we did not oscillate enough around 5,000. I do think we're going to pull back to 5,000 at some point. Another one of the reasons being, if you look at 5,000, we basically on this chart almost exactly tested it. Well, not on this chart, I suppose. There's on the this is the current contract, and we always roll over day to day, so we switched to this one. But I don't know. Let's look at the SPX. You can see we essentially tested right near 5,000 on the SPX. And we didn't really hold around that area very much. So again, I do think we're going to be pulled back to the 5,000 magnet, but we're starting to make a convincing rally towards, a little bit higher and potentially up into 6,000. Like I said, do I think we'll get up here? No, I don't. But it's becoming more and more possible when bulls continuously get strong bull trend days and they keep adding really good bull bars to this rally, like today. So again, I still think this gap is going to be exhaustion. We're going to pull back into this area, but we keep doing this, right? Every time we get a bull bar, we end up getting a big gap or like another good bull bar. So who knows? But like I said, I still think this is exhaustion. I doubt we'll get good follow through tomorrow, but the bulls keep proving me wrong. Bar one, a bull bar, a good looking bar. It's a reversal up, but it closes right on the moving average. So there's probably more sellers above than there are buyers. You don't really generally want to be buying right on the moving average, especially on the opening bar. One of my thoughts coming into the day was we probably had to trade above Friday's high. And the reason for that is the daily chart. You can see it's an inside bar and a high one buy for the bulls. And generally when there's a high one buy, traders want to see it triggered. Now, since it's a high one on the daily chart, if what you remember about high ones is you end up getting a pullback from a high one and it leads to a deeper pullback and then trend resumption. So usually the high two or the high three ends up working is higher probability. So I wasn't too convinced there was going to be a ton of buyers above the high one, which was yesterday's high, which was right here. Obviously, today was one of those situations where there was. But a lot of times when you see a high one on the daily chart, you can generally expect a deeper pullback and then trend resumption later. Disappointing follow through on bar two, a bear bar closing near its low. It's good for the bears, but it's really not all that great. Bar one was reasonably strong bull bar. We're probably going to trade back towards its high at some point. So I don't think you have a very good chance of selling below bar two and having anything meaningful happen. Bar three, an outside bar. So basically traded back towards the one high. We traded below two and then traded back up to the one high. So might have trapped some bears in who sold two, but they're probably scaling in. And the bulls who bought above one scaled in below two and are using three to exit. Another outside bar that traded up to yesterday's close on bar 4, so it's outside down. So 3, 4 consecutive outside bars is an OO pattern, which is generally means there's a 60% chance you get at least some sort of follow through or some sort of measure move down. But this is not very good. The context is not all that high, not all that good for a high probability trade, and the bar is really big. Bar 4 is the biggest bar we've had today. So it's big bar, big risk early in the day when there's a lot of violent reversals. So it's probably better to just wait rather than take the buy above bar 4, or sorry, the sell below 4. You can see it never triggers, and then we have bar 5, a high 2 on the open. So high 1 above bar 1, and then a pullback and a high 2, bar 5. I have a whole bunch of examples. Well, I thought it was a 1 in 30% chance. There it is. Just throw that in there. I thought 30% chance that bar 5 ended up being the high or the low of the day. So I thought it was reasonable to buy above 5, put a stop below 5, and it's definitely one of those trades you could Walmart where you just don't look at the market for a couple hours and you see what happens. Because again, if you're buying above 5, your premise is that it's the low of the day. We're going to at least get to yesterday's high, and we might get some sort of bull trend. So it's pretty reasonable to do that. However, the tail on 5 is disappointing, but it's a small enough bar with small enough risk that I think you should get at least a second leg sideways to up and potentially more. Follow through for the bulls on bar 6 is pretty good. So you bought above 5, you have good follow through on 6. There is a tail on the top and the bottom, and it does not close above the moving average, which is disappointing, but still good enough follow through for bar 5. Bar 7, you can see overlaps with the 5 high, so not as good as it could be. Bulls wanted some sort of open gap to form there, but instead it has overlap. What do bulls want? Well, they want a breakout above, this channel 5, 6, 7. They're hoping for a quick bull breakout above, and they want to basically get a vacuum test of yesterday's high. And it starts to happen. You get a good bull bar closing near its high on bar 8, but this is a new breakout. You have 5, 6, 7 going sideways to up, and then you have the breakout bar on bar 8. So rather than thinking of this, it is follow through for this, but to me, 8 is more parabolic, and it looks like a breakout attempt of the 4 high and its own breakout. So I think rather than buy the close 8, which it probably is, you probably need to wait and see if 9 is another good follow through bar. Because bulls who are buying up here, they're hoping that they're going to get another good follow through bar that looks like 8 on bar 9, and that's going to close at this new high, or at least test the new high. Bulls are hoping we get a vacuum test up here and they can take some profits before we get a pullback that they don't really want to sit through. 9, a bear doji bar. You don't really have to exit below 9, I don't think. It's a low one short for the bears. They're hoping expanding triangle, but after 4 straight bull bars, I think that the downside is probably rather limited. And I think it's more likely that if we do go below 9, it's going to be a minor reversal, and we will probably end up trading back above 9 at some point. 10, you can see we tried to break out to the new high, but instead we broke out just to this close, and then we found sellers. So disappointing tail on top of 10. Could be 2 legs sideways to up. It's kind of difficult, I think, at this point to be buying. You want some sort of good follow through here, but it's okay to be holding long. I think the problem is if you're holding long, you have to realize we're probably about to get a pullback. The price action up here is not as strong, and it might be forming in a developing trading range. However, the daily range is pretty small so far. It's like 10 points. So we're probably going to double, and you can just take a chance that the range doubles to the upside and that we have seen the low of the day. So you can probably still hold your long. Disappointing follow through on 11, but probably just a lot of bulls dumping out of their longs, hoping that we're going to get a couple legs sideways down and then they can look to buy again. Follow through on 12 for the bears, but a big tail on the bottom of 11 and 12. It could be 2 legs down on a smaller time frame. So down on 11, up on 11, down on 12, and then we went back up on 12 and started to rally on 13. So high 2 sort of thing. But either way, buying above 12, not ideal. It's a bear bar, so I'd rather not buy above bar 12. 13, you can see it's a bull bar, but big tail on the top. Why? Because 12 wasn't really all that great of a buy. There are probably more sellers somewhere up here than there are buyers, but it's still okay to be holding long for a swing, I think. 16, it's a double top with 10, but it's a bull bar. So the fact that it's a bull bar is a problem. Bears wanted a big bear bar closing near its low, trying to force bulls to exit and hope for their measure move down. Instead, they got a bull bar with a big tail on the top. So while it is a bear reversal bar, technically, because although it's a bull close, it's closing well below its midpoint. No one's really going to want to sell below that. There's probably more buyers below, as you can see during 15. And then we get the outside up bar. 16 is kind of interesting. It's an IOI pattern, so it's a breakout mode pattern for the bears. but a pretty tight channel up. I don't know if you have to exit below 16. You probably don't have to, but it's definitely not wrong to exit your longs below 16 because sometimes 17 is going to be a really disappointing bear bar. One thing the bulls had going for them at this point is we have this open body gap you can see. So we broke out above here, and then we never got back and got a close below here. So we do have an open body gap with basically the open of 2 and the close of 12. So we might end up going a little bit higher, but it can definitely be hard to stay long below 16. So if you're not staying long below 16 and you exit below 16, double top. I don't think it's unreasonable to do that. I think if you do, though, you got to find a way to get back in. But again, I think you definitely can stay long on the premise that we've seen the low of the day, right? It is an IOI and it is breakout mode, but the range is 13.5. So the daily range is going to double today. And it's probably reasonable to just take a chance that the market doubles to the upside rather than exit your long below here and wait to see what happens. And that we're on bar 16. And so again, 90% chance every day we break out of the 18 bar range. Do you think that 17 and 18 is going to be strong enough that we get all the way down here and we break out to the downside of the 18 bar range? Probably not. So we're probably at least going above this high. And additionally, yesterday's high is still going to be a magnet. So there's even more reason why we might end up getting above yesterday's high. So while it's probably okay to exit below 16, there's a lot of reasons why you don't necessarily have to. 17, a reversal up. Can you buy above 17? If you exited below 16, probably not the worst thing in the world to buy above 17. Again, for all the reasons I just stated. And if you exited below 16, what were you scared of? This is a good thing to think about. If you exit a trade, you have to think about what are you thinking is going to happen. And you can obviously say the market's going to go in the other direction, but how are you afraid it's going to go in the other direction? So if you exit below 16, you were scared 17 was going to look something like, bar 4 or some sort of big bear bar closing near its low, or bar 57, right? You were scared that below 16, all the bulls were going to dump and we're going to get a huge bear bar. Instead, you get a doji bar, shows a lack of follow through to the bears. So a lot of bulls, they see that and they just buy back their longs, for all the reasons that they were just long. And that's why we get bar 18, a follow through bar. 18 closes above bar 10. It's a good bull bar closing near its high. It's a breakout above that 10 high. What do they want? They want more follow through, and they get it on 19. So 18, 19 consecutive bull bars closing near their highs. It's a new breakout above the 10 high. So we're probably going at least a little bit higher. Okay to buy 18, 19. But again, if you're buying 19, it's pretty climactic, and it's probably more of a scalp, I think. At this point, you can see those bulls who bought were able to make 5 points. They were able to make more than 5 points if they were, really good. 20 follow through for the bulls. Good for the bulls. You can see we're starting to form open gaps. This is a big gap. You could just argue the 18 high and the 20 low. That's an open gap. And reasonably sized bars. So 18, 19, really strong. 20, more follow through. 21, a doji bar. When you get a doji bar like that, it might be the start of the channel upwards. So if we do start to go up a little bit, we might have to test back down to the 21 low. Was not the case here. But in general, in a bull trend, when you get a doji bar, you'd imagine that the buy to close is going to come to an end pretty quickly, and that we're going to start to go sideways. Granted, in this scenario, it was a doji, but it was a bull doji bar, and it was closing near its high. So still always in long by the close. Follow through 23, still always in long, still by the close, but really climactic. We're probably headed more into a profit taking area than we are continuous by the close, and more follow through 23. Or sorry, I think I just said 23, but 22, 23, same idea, really climactic. And you can see eventually traders just exit the market. I thought one of the possible targets, you can see we had a pretty strong by the close rally over here that should have a second leg up. So I had that marked, which was around 53.19. And I thought we might have to get back up to that, or sorry, 17. Was it 7? I thought it was 19. I don't know why. Oh, that was the high. The high was 19.5. But anyways, this by the close area was probably reasonable. So I'd imagine we're probably going to get back to it sooner or later. And there might be sellers there, right? The same way we had this area over here where there was tons of sellers because the bulls who bought this close were disappointed in this. They used the rally to exit. So we might end up finding sellers there. Instead, or I guess I'm not to that part yet. Such a big day. Hold on. I'm just going to cut off the bottom a little bit. So 25, disappointing follow through. I think it's just bulls exiting longs. You see 24. A lot of them are just going to exit at the market because we're probably going to get a couple of legs and a couple hours of sideways to down trading. This is a rare day. Usually when you get a rally like that, the market tries to go sideways for, an hour or two before it makes a move. I don't think it usually just, takes off to the upside again. 27 or 26, it's a high one for the bulls, but after 3 straight bear bars, again, I'm expecting at least a second leg sideways to down, and we're probably going to go sideways for a little while, so I would not be looking to buy just yet. 27, a bull bar closing near its high. It's good for the bulls, but if you're buying it, I'm doing so with a wide stop, at least a measured move down of bar 27 high to the 26 low, probably plus a couple of ticks. You can see you get disappointing follow through on 28. So 28 could be the second leg sideways to down, but 27 is a strong enough bull bar. I'd imagine we're getting back to its close at some point, which for the record is the same thing with 23. We're probably getting back up here. Very likely, I would say, 70% chance at this point that we're getting back to at least right here. So you know that any reversal to the downside is probably going to be minor. And the bears are going to need a really strong breakout bar with really good follow through. So like I said, 29, you can see we tested around the 27 close. Yes, it's a double top, probably a lower high double top, and it's an inside bar. But, you know, if you're selling below 29, you're selling a low one in what's probably just a pullback and a minor reversal. If you're going to trade these minor reversals, you want to be in on the first leg, betting on the second leg. You don't want to be selling a low one short during the second leg. It doesn't really make a lot of sense. Will occasionally 29, will we very occasionally get a collapse below 29 and just a big bear bar on 30? Yeah, but it's really not worth betting on. 30, it's a high two. I would not take 30. I think that, if you're buying above 30, you probably need a pretty wide stop. And there's a big tail on the top and a big tail on the bottom. And again, I think after this much buying, we're probably going to go sideways for at least another hour or two. Probably like in at least another hour, at least, like I was saying. So probably sellers not too far above 30, probably buyers not too far below. Follow through for the bulls, 31. Consecutive bull bars, but a tail on the top of 31, not as good as it could be. And then you get a doji bar, 32, disappointing. So again, this is not ideal. We do have open gaps, good for the bulls. But why are we getting big tail 31 and then a doji bar 32? Makes me think this might be more of a minor reversal. 33, bull bar closing not quite near its high, but I believe does break out above the 23 high. Right, so on 33, you can see we broke out and got a close above the high of 23, showing that bulls were still willing to buy. So it's really important that 33 closed above the 23 high. We have multiple open gaps early in the day. We have 33 closing above the 23 high. So that is the breakout bar. Now you're looking for follow through. And you end up getting your follow through on 34. So we get a breakout above the 23 high. We get follow through 33. And now we have consecutive bull bars 33, 34. Is it great by the close? No, probably not, because it's a smaller bar and it's a lot of overlap with 33. But is it reasonable by the close? Yeah, it's reasonable by the close. So you can buy above 34. Climactic follow through on 35 and 36. If I bought above 34 and I got 35, I think that's a really climactic bar. And we're, 20 plus bars into this bull trend. I might get out on the close of 35. And if I bought and I saw 36, I am definitely getting out on the close of 36. I think that is extremely climactic behavior. So again, when you see 35, 36, the thing you have to keep in mind is when you get the best looking pair of bull bars deep in a trading range or deep in a bull trend, you know that there's a 60% chance that the market's going to start to go sideways to down and that this is the end of the trend, and also a 60% chance you get one more leg up. So you see 35, 36, I think 60% chance this is the end of the trend, and 60% chance you get one more leg sideways to up. Now, 40% chance this happens, but you're betting on a 40% chance, and 35 and 36, the risk is going to be really big. So it's probably not as good of a trade as it could be. So 35, 36, climactic by the close, but still by the close. Disappointing follow through 37, so not as good as it could be, I think. And a lot of bulls might look to exit like they do during 38 around the close of 36. And then a high 139, so an I bar, high 139. And then a huge bull breakout, again, 40. Not huge, but a bull surprise on 40 for sure. Again, these are by the close bars, yes, but it's really difficult by the close up here. I think after this could 39 and 40. I think 40 could just be the one more leg up the bulls were expecting to get. And then you get a bear bar closing near its low 41. Now, what do you do with 41? I think bulls get out below 41. And what are you expecting if you sell 41? You're expecting 2 legs sideways to down. And like it or not, 44 and the tail on 45 was your second leg sideways. So sideways to down does not always mean down. Sideways to down can often mean just sideways. And you did get a second leg sideways to down. So that's the tricky thing about counter trend trading, is that a lot of times you get a trade like 41, you can't make money on it. It's not really possible, unless you're extremely fast or lucky. But you can't really make money taking that kind of trade, but you do get the expected second leg sideways to down. Again, we have all sorts of open gaps at this point. Here. It's pretty early in the day. Do I think we're going to get a big midday reversal? No, but I'd imagine that we would probably start to go sideways at some point pretty soon here. Consecutive bear bars, 41, 42. We're probably going at least a little bit lower, and we're probably getting a second leg sideways to down, but this is a minor reversal is the thing to keep in mind. Again, 38, 39 might have been the final flag, and if you get a breakout above the final flag, the market often tries to test back into it. But the rally up is too strong to be trading against. So while I think that, we might start to go sideways here, it's still a minor reversal. And if you're selling 41, 42, your big problem is the bar 40 close. Buying the bar 40 close wasn't great, but it was reasonable. So we're probably going to have to retrace back up towards that area sometime today. So not really as good as it could be to be selling here. 43, a big bull bar closing near its high, testing around the bar 40 close. It's good for the bulls, but after 41, 42, I don't know. I'm not sure how much higher we're going. But 43 closed really strong, so that is good for the bulls. You can see we never triggered above it. Instead, we got 44. 44 is a double top with 42. In general, when you get a double top bear flag like this, I guess it's not really a bear flag, but traders would argue 40% chance measure move down from below the neckline. So basically a measure move down of 41 and 42 because the neckline is 41, the neckline's the 42 low from 41 and 44. But I'm not really sure that it's even 40% because of how strong the bull trend is. But I wouldn't argue against somebody who said it was 40% chance. 45, disappointing for the bears who sold 44 because you don't want to sell on a bull trend day. A high 2, 45 closing your tie. You can take 45, but I missed out on the vast majority of the second half of this rally. Basically, I exited my longs, 20 bar 23. And, I probably could have bought again above 34, but once I saw 35, 36, I was pretty much done buying mentally. And I was just decided if this goes up all day, then that's fine. I don't have to be in on that. Because it would just be so rare. It would be really extreme if the market did what it does. And, I wasn't a huge believer in the context because I didn't think the daily chart context was all that great for a huge bull trend day. A lot of times when you get a high 1 bar like this with a reasonably good bar, it'll start to bounce to the upside and then sell off towards the end of the day. So I wasn't really all that thrilled with the context of the high 1. But again, price is truth. So sometimes when you just rally all day, you just have to accept that that's what the market's going to do and either get in on it or sit out and do nothing. 46, really good follow through for the bulls who bought above 45. So if you bought above 45, you're probably pretty happy with 46. Again, I think this is still, to me, a profit taking area. I'm not super eager to be buying 45, 46, especially. Disappointing follow through 47, but we're not able to trade below it. So something you notice, if you bought 45 or 46, there was never actually a reason to get out until over here. So bulls would have exited below 47, but it doesn't trigger. They might exit below 51, doesn't trigger. And we just kept on rallying. 54 was an inside bar. I'll get there. But 48, an inside bar, a high 1 for the bulls. Again, not really that great. I don't want to buy above a doji bar, but it is a bull trend, and any good bull bar has been pretty much by the close. But 48 shows you that a lot of the bulls who bought, you can see this is their entry price, and they used the rally on 48 to exit. So a lot of traders are exiting. But instead of starting to sell off and go sideways, we get 49, a bull bar closing relatively near its high. Okay, so more follow through 50. Again, this is still really strong. We're still going higher, so you can't really sell. But I think it's just really hard to buy in this area. Sometimes on small pullback bull trend days, what the market will do is I have examples, I'm not going to show them. But if you go back to, the past 50 small pullback bull trend days, a lot of times what you'll see is the market will rally up until, bar, 30 to 35 or something. And then it'll go sideways to up a little bit. And then around bar 55 or 52 to like 53, it'll break out again, but only for a couple of bars. And then it will start to go sideways for the remainder of the day. So in general, on small pullback bull trend days, you look for the market to go sideways and then trade the second leg up. But occasionally when it's really strong like this, it just doesn't go sideways. 51, a bear bar closing near its low. Bulls will exit. Again, we've been formed a whole ton of wedges today, but the market continuously forms wedges on bull trend days, and it continuously ignores them. So I would not trust selling a wedge up here. But bulls are going to exit below 51 for sure. But again, instead it doesn't trigger. So bears who are front running to close at 51, trying to get a bear bar closing near its low, instead get disappointed with 52. And what they see is we don't trigger 51. So they think, maybe I'm trapped. And they just exit at the market, and that causes the bounce 53. 54, an inside bar, a high one, but it's a bear bar. So it's not really ideal to buy above a high one bear bar. And it ended up being the final flag. As you can see, we got climactic follow through 55, 56. 56, again, a bull bar closing near its high, but I have the same problem with it that I have with all of this stuff, is that sometimes it's just going to do this and you're going to lose a lot of money. And so that's why I don't like buying these really climactic bars, 46, 36. It's not all that great, 56, exactly. And then you get outside down 57. For me, I'm done on the day when I see 57. I think that we're in a trading range for the rest of the day now. It'd be really rare it could just be a bear trap and maybe we continue to rally, but this is pretty overdone. So I don't think that's the case. And I'm not really willing to sell anything because of how strong the trend has been, but I'm really reluctant to buying unless we come down a lot and get a reversal up and it looks like a trading range, because of how climactic this move up has been. So I think we're going to go sideways. 58, disappointing follow through, which is relatively expected. 57 is probably not going to have good follow through. It looks like it's just bulls exiting. 59, follow through for the bulls. Consecutive bull bars. We're probably getting back to at least this close, but I don't know how much higher. A bull bar 60, but these are not great bull bars. This does not scream that, we're going to undo everything 57 did and get a huge bull trend. This just screams trading range to me. 61, an inside bar closing near its high, but again, you're buying high in what's probably a trading range if you're buying up there. Disappointing follow through 62. And then outside down 63. It's double top 57, but I'm not selling anything. Don't care. I'm not selling this. Some traders were real smart. I'm sure they took the sells, but it's late in the day and it's a bull trend day. Oftentimes, though, you do get along just traders. If you think about it, if you bought early in the day and you held the whole day, you've made a pretty good profit. So traders start to exit. And so that's why oftentimes on a bull trend day, you will get a sell-off at the end of the day. And on a bear trend day, you will get a short covering rally at the end of the day because traders have been in their positions all day and they figure it's time to start getting out of them and taking profits. So you will get those reversals sometimes at the end of days, but it's not really, I don't know. This is just so extreme that it's not worth trading for me. 64, a reversal up. Again, the bear bars are going to end up having bad follow through because of how strong the bull trend day has been. But 57 was a really strong bear bar closing near its low. We might have to get back to the 57 close. And we did not test back up to the bar 56 high yet. And as climactic as it was, and as it wasn't a really good buy, it still wasn't super unreasonable thing to do. So you got to figure there were some algorithms that took it and were scaling in. And the moment we trade above the 56 high, like over here on 72, you can see traders just sold. So that's what was causing that over here. If you were buying in this area, this was your target. You probably weren't even looking for a new high. You get out one tick above the 56 high or around the 56 close is fine too if you're a little more conservative. 66, a bull bar closing near its high. You could argue it's a big high two, high one, pullback high two, or smaller nested high one and then a reversal down, high two. Either way, if you're buying it, reasonably tight channel down, we might go a little more sideways, so maybe a wide stop. Instead, you get 67, a bear bar closing near its low, an inside bar, and then a reversal up 68. Again, you're not selling 67. It's a third leg down, one, pullback two, pullback three. Third leg down at the bottom of a trading range on a bull trend day. Just a recipe for disaster. Probably buyers below 67. 68, a bull bar closing near its high. It's, it's breakout mode, but it's a tight trading range. If you take it, probably have a wider stop because you can pretty much bet against bear moves with invincibility for a lot of this because it's pretty unlikely that we're going to get some sort of move down. So if you buy, maybe put a stop, below 51. And if you get a bear bar closing near its low at any point, you just get out, but it's pretty unlikely that any sort of bear bar is probably going to get bought up. 69, follow through for the bulls, consecutive bull bars, but we're probably not going much further than here. And then 70, a huge bull bar, but again, we're probably just going here. Inside bar, high one at the top of the trading range. This was bull's chance to get another breakout to the upside, the high one, but I don't, it just looks like a final flag to me. I'm not buying that. I think that probably seller's not too far above. And if you did take the buy 71 and you see 72, you got to get out. It shows you that the bull sold and that it's bad follow through. And, this is not the area to, monkey around and hope that we're going to get a rally. It's probably going to start to be a sell-off here and you got to just get out. So that's what's 73 at the latest, get out below 73 or 74. 75 closing near its low. And again, this is bulls exiting. You could take it, but I don't know. I'd rather not. Stop entries on the day, 5, pretty reasonable to buy above 5. Betting on a potential low of the day. You could buy above 8, pretty much same thesis. Or sorry, 7, same thesis. Yeah, I mean, you can buy above 8, but it's kind of climactic, and we might have to pull back soon. So you probably take the buy above 8, but you buy small and you look to scale in or look to add more higher, because it is by the close, but it's a breakout bar. It needs follow through. Disappointment 9, so not doing anything there. I thought you could buy below 14 since it's a bad double top and we're still always in long. If you get a big bear bar closing near its low, you get out. If you get out below 16, you can buy it again, 18, 19, 20, 21, whatever, 22, 23, but climactic. I would not take 30 personally, 34, 35, 36, but climactic. Again, same problem with 40. It looks like the one more leg up you get after 35, 36. Maybe 45, I don't know. I wouldn't, but someone, it's not unreasonable. It just looks like a tight trading range to me. And after the II 38, 39 possible final flag, but maybe I'm just in denial and price is truth. And we have open gaps and we've been rallying all day and the bulls are overwhelming the bears in every capacity. The bears have not made money on a stop order trade. They didn't make money on a stop order trade pretty much all day till the end of the day. So that's something to pay attention to. If in the opening range, you can see any stop order trade the bears had that was remotely reasonable just immediately got trapped. So again, you can take the buy 45, but it's just tough. 46, same deal, really climactic. And you didn't really have to exit anywhere. And you could buy above 68, but I don't know. On the daily chart, again, it's a big breakout, a bull bar closing near its high. I think we're going to get disappointing follow through tomorrow. But, again, sometimes the market will just continuously prove you wrong, which does happen. Again, I thought maybe a wedge, 1, 2, 3, and maybe we're trying to get a breakout above it. I would just be really surprised if this gap stayed open and this just turned into a big bull trend. I think we need to test back to 5,500 and probably this high. I'd imagine the bears who sold above this high, the 612 high, and are scaling in are going to make money. So I would be pretty surprised if this gap stayed open. I'd be outright stunned if we never got back to the 612 high. But I would still be really surprised if this gap stayed open. I think it's probably an exhaustion gap. But yeah, that's the day.